Again, just to kind of reiterate, if you have not yet subscribed to the YouTube channel, there's a little subscribe button when you get over here on the right. And, when we make these videos like classroom recordings or we update any videos, it will send you out an alert and an email. So that way you'll be in the loop all the time. So if you haven't done so, please feel free to subscribe. I try to email everybody out anyway, but, again, sometimes, spam filters catch things and who knows what. We're going to go through live market. We're going to go through a lot of stuff today. Again, just as the disclaimer, the lawyers love it. We are not here to call trading signals for you. We are here to, come on, disclaimer. We are here to teach you how to read the software and how to be confident and how to build a plan and how to take care of yourself as far as your trading goes. And again, it's really, really important to me that you understand what my purpose is and what your purpose is. You want to make money. I want to do two things. I want to create the best software possible and teach you how to use it. And, my contention is that when you learn how to use the software properly, you're going to be able to reach your objectives, which is to make money. Now, just real quick, I always like to go through the objectives first. So look, in the trading plan, our objective is what? Minimum objective for doing what we do. We want to be able to take $3,000 and we want to turn it into $500,000, which is a horrifically huge number. I can't even do the percentage in my head. It's so big. I mean, that's, what? 1,000%, 100,000. I mean, it's ridiculous. Okay, so it doesn't matter. You're never going to make a penny if you don't do it right. You hear what I'm saying? I know this is a negative beginning to it, but look, if you screw it up and you don't do it right, you're going to lose. So consistency in the way you trade the market is the most important thing on the planet. You guys hear me? So watch, we're going to go through now the charts and we're going to talk about the rules, and you're going to see how inconsistent trading loses every time. So, again, watch. Let's go through it together. Everybody okay with this? We want to make a ton of money. We're going to follow the plan, blah, blah, blah. Same old, right? When I was talking to Selena earlier this morning, I said to her, I said, look, listen, I said, if it's green, go long, don't go short. So Ty, this is your first picture of the day here. And again, just to kind of, hash through the thought process here, look. The triggers are green and everything is going up and you went short and you lost. Again, we're going to try to determine if we can see a pattern between the winners and the losers, okay? So let's just go through it together and let's just see how it works out and see if you guys come up with anything. The market background colors. Okay, so I'm going to write out, kind of some of the rules too, but I want you to be able to visualize this stuff, guys. If you can't visualize it and make it simple in your head, then you're not going to be able to repeat it. So first, I want to look at the first trade, okay? And for whatever reason, there was a counter trend trade here, edge of fibs, right? Whatever the reason, call it what it is. And you lost 13 ticks, which is a little too high from the edge of fibs because, look, if the edge of fibs doesn't hold, it should be a much smaller loss than 13 ticks. I mean, 10 on the high side. Because if it breaks through, then you're breaking through. The rule for counter trend trades, guys. Number one, you have to be at the edge of fibs. And then number two, if you lose your first counter trend trade, you don't take any more. because if the market continues to trend up, then you're going to continue to lose. So I want to, visualize something. The name of the trade is what? We call it an edge trade. Everybody agree? I mean, I can pull up the plan, but you can just say yes. It's an edge trade. And the problem is when people do pivot stop out trades, but they're not actually at the edge of fibs, right? The edge of fibs is inclusive of all of your charts. Ty, you got stopped out at the edge of fibs. You see that? You went short before the edge of fibs and you got stopped out at the edge of fibs. And again, you fought a background color that was green and strength to the upside, and you lost. And that was your first counter trend trade. And then, again, I don't know what happened, but you did another one. But I also want you to also pay attention to, because this is really key. See how your synthetic triggers at the time you're taking this trade are pushing up really, really hard? So, there's a couple of mistakes here, and it's easily correctable. But when your synthetic triggers are pushing up really hard, can you guys hear me okay? Somebody just said might. Okay. Just making sure. It scares me when I start talking for a while and people say that. All right. So again, look, the synthetic triggers, when they push really hard and they're already at a fib, it's going to break. And I don't know how else to kind of say it except to say it, but there's a couple of mistakes here. Obviously, you didn't do your short from the edge of fibs, and then you did your short against triggers that were pushing against you. So there's and again, look, this one, whatever. You did your trades. It's no big deal. But here's what happens. When you get the counter trend trade bug in your head, this is the problem with counter trend trading. Okay? And again, look, I'm going to go out on a limb and I'm going to say none of the trades are terribly difficult if you follow the rules. But what happens is when you're counter trend trading, and again, it looks like you had a long trade here, if I'm not mistaken, and you had a target. I can't really see that one, but look, long at fibs with green background. And if you had just hung on for dear life until it got to resistance, you would have made a bunch of money. Then look, it's green again. And what happens is you get the counter trend trade bug and you skip the long winner because you're just waiting for it to get up there so you can go short. So I want you to kind of think about the logic. You're like, I know it's going to go up so I can go short. Why don't I go long and make the money with the trend with everything going my direction? And strong triggers. Just a thought. When you get the counter trend trade bug, you can't get it out of your head and you miss everything that's with the trend. So you end up with two short losers instead of long trade winner, long trade winner, long trade winner, and having three easy wins with the trend. So again, look, I don't mean to beat anybody up here, but again, there's some really common mistakes that are being made on this chart. So I wanted to really go through it with you guys. I'm working my way backwards here. So Ty, got yours. Somebody's report. All right, let's take a look at this picture. I'm not sure whose it is. Doesn't matter. All right. Selena, is this yours? I'm not sure. It is? Okay, good. All right, so let's take a look. And again, let's use logic in background colors and our triggers when we just look at, and again, look, you're up money, which is great. And this is where new users get themselves in a little bit of trouble. They're like, wow, I'm a great day trader. I'm up $300. And what happens is you start to trick yourself into thinking that you're better than you are when you're doing the wrong trades and getting lucky. So again, we kind of talked about this already this morning, but look, you did a long trade right there. I'm just going to put long here so you can kind of see. And again, I know it's a long because the blue tick is on the right side of the bar. And then you did a short trade with everything going down. Now look at the difference between short with red and going down triggers equals easy money. Long with red triggers and down triggers is a loss. So again, we're talking about patterns here, right? Now, again, you did, I'm going to go to your smaller chart here. So look what you did right here. And again, I appreciate you posting in pictures, and I know it's I don't want anybody to go, man, that John is an ass, because he's always picking on my pictures. But again, I just, it's about learning when you should or when you should not. So this short is after major blue lines and divergence, which is a termination condition. And again, if you go short after Fibonacci support holds, and I'll put a circle on it right here. Look, right here. If you go short after support holds, you're going to lose most of the time. So again, this trade, there's like 9 things wrong with it. So I'm trying to be easy on you just a little bit because I don't want to hurt your feelings too bad about the trade. But again, most important is you had a termination condition. Don't go short. Secondly, you didn't go short from any resistance. So the idea is to buy the blue lines and sell the red lines when possible. Now, you did technically sell the red line later, which was good. You just forgot to take your profit at the blue line. So again, you're getting the right idea. Just this is what happens when you're new. You're like, okay, was that a trade? I think I should go. And then you end up late. And then you're like, it hit that blue line. Was I supposed to be getting out there? And then by the time you think about it and process it, you get out way late again. So what should happen is, and the short's good. I mean, it's a great area for a short. You should have your limit order waiting as a profit target at the target. So when it hits the target, you're selling high, buying low. And instead, I mean, the sell's good. I just have to say that the exit's not so good. So again, these are just all little things that you're going to work on as time progresses. And I think you took half of it off. It's hard to see because it's a little squished up, but I think you took half off, but then look where the other half went off up here. Now, unfortunately, there's good and bad here. So again, look, this is more exit management. Exit at targets. Just don't even worry about anything else. Just get out when you hit a target. Don't wait for it to bounce. That's all I'm saying. You're just giving away money. Now, one more little piece, Selena, and then I'll leave you alone, I promise. But look, right here, and I'm going to put a big white box on it right here, a double white box. This is your edge trade long. Technically, you didn't take it. You took it as an exit, but this was your edge trade long pivot stop out at fibs. And what happens is you technically have already had, and again, this is just experience, so you'll get this, but look, you had 1 pivot stop out long, you had 2 pivot stop out longs, and you're trying to do it a third time, and it doesn't ever work the third time. Usually it doesn't work the second time. It did this time, but usually, so we've already had the edge long trades, and usually edges are one and done. There's a couple small exceptions where you can do them twice, but for the most part, when you're going counter trend trade or buying a bottom, there's a reason they're coming back down there a third time. And you will more than most likely lose the third time down. Did you do the trade over here? Eddie, and your comment is really, really, really correct. The counter trend trade obsession appears to be the failure of most traders. It really is. If you do them at the right time and the right spot, it's great, but most people don't. And that's where the problem comes in. So again, the thought process is once fibs and pivot stop outs have held, you can't dip into that well again. You're going to end up losing. I'm just wondering, did you take that trade, Selena? It didn't? Okay. Anyway, needless to say, look, you're making progress on day 3 already. So again, look, what you need to eliminate more than anything else is when the triggers are going down really strong, just eliminate any buy signals. So you want them going down strong, you want to sell only, and up strong, you want to buy only, and then basically buying and selling at support and resistance. Don't go short after support holds. If you're short and you hit support, get out. Just little things like that. Okay? So again, a lot of feedback on that chart for sure. Here's a picture for you too, just so you have it. All right, moving forward again. This is your earlier picture, so same pictures. So we don't need to do that again. All right, now here's somebody else's picture. And again, look, I like for you guys to see both ways and both ways of doing things here. Because some people have the knack for making money and they're following the indicators and some don't. And what's the difference? It's just application. So look, this person opted for going long when all the trigger lines were going up really strong. Result of the trade was winner. For whatever reason, I guess there was some news out, but for whatever reason, they didn't take the second long, which would have really been, look, that's optimal. You can't get anything better than that, really. Multiple fibs with the triggers going up, and that's the type of spot to be assertive going long. You see that circle? So that's kind of a really big missed opportunity. That's almost free money from support, the 5430 area, $400. Almost free money. If there's such a thing as free money, that's pretty much what it looks like right there. So should have been 2 longs and then, look, a very assertive short trade from the edges. Now, the thing that I really like about this is they took a very quick profit target at the long signal, because technically this is the long spot, right, or the trouble spot for shorts. So again, it was very assertive trading at the edges, a pivot stop out at the edge of fibs, and not getting too greedy when all the colors are against you. So again, this would have been a perfect 1, 2, 3 combination had that long trade been taken. Everybody okay with that? And again, you'll start to see the pattern of the trades that are, really a lot easier that people take, and they all tend to have trigger lines going with them here. So again, this is the same trade from earlier, so I appreciate you guys posting in. Here's one more person. And again, look, I don't care who it is. It doesn't really matter. Once you start to see the look, then all of a sudden it all starts making sense to you. So again, look, on the large chart, the background color's red. On the 8-2 chart, the triggers are going down. The background color's red. The rules for a trend trade are as follows. Again, sometimes we don't always talk about the rules. We talk a lot more about the looks. But look, the rules for trend trade. Number 1, the 14-2 chart triggers are okay, right? I'm not going to go into too much detail here. Number 2, the 8-2 chart triggers are okay. Number 3, you did not hit the target. Number 4, 5-1 chart for entry at resistance. Fair enough? So essentially what we're doing is we're getting, this is an ideal perfect trend trade if I've ever seen one, right? Look at the look. Everything's going down. Look at the look. Everything's going down. So find resistance on the small chart to sell. And the net result is what? 200 plus. Easy. Probably should have been closer to 300. But anyway, look, doesn't matter. 200 plus, and that's about as easy money as you're ever going to make. Do you guys see the synergy across all the charts? You know, again, you had, up here at the top, a termination condition, right? Pivot stop out with divergence at the top, terminates the trend, and then everything rolls and it's easy money. Probably could have picked up a short right here. You guys see where I'm talking about? Probably because of, and again, this is where I want to add in just a little bit of lesson for you guys right here. Because of what happened on the big chart, you can be a little bit more assertive on the small chart. Maybe they weren't awake, maybe they weren't watching, whatever the case. If you get the opportunity because of a termination condition, you can be a little more assertive early. You don't have to wait for everything to roll on the big chart. Everybody okay with that? Again, you must have the correct look, and then sell a pullback to resistance, and it really works out very well most of the time. Very good illustration of an almost perfect trend trade. And then finally, we end up with, again, let's take a look at the picture and let's see if we can figure out the pattern. You guys tell me what you think, and, tell me if, consistency reigns here. A long trade with a red background and the triggers going down. Barely gets away with it. Long trade with all trigs down and barely wins. You win, but you barely win. Here's the problem with barely winning on a long trade against the triggers and the trend. The biggest problem is this. And again, this is my opinion. And again, look, you missed this short and this short, which freaking pay the bills. Because you're trying to go long and you're thinking about longs, you can't get your mind wrapped back around. You need to be going short. And the shorts were like horrifically easy money makers. Do you guys see it? And again, look, I can always see it, and you're in the heat of battle, and sometimes you miss it. But to me, the long trade that barely wins is lucky. But what it does is it ruins the short brain. You know what I mean? You get your brain turned around all backwards trying to counter trend trade, and you miss the golden goose, the ducks, the easy ones, the gimmies. I mean, if I had to draw a picture of the most perfect gimme short look ever on the planet, those two circles and those two yellow arrows would be it. Ducks. It doesn't get any easier. 4 triggers past red fibs, everything going down, you're going short, you're getting rich. Now, again, look, here's where issues come in. Look, multiple time frame fibs have been reached. How many triggers are past the fibs? You always have to ask yourself that question, guys. And when you ask the question, what's the answer right here, guys? I'm going to draw a circle in right there. What's the answer to the question with 2 red fibs, how many triggers are past it? 2. There's only 2. So the problem is not only is it a termination condition, so look, I don't know how this trade turned out or if it turned out at all, but this is a termination condition and this long trade is low probability. And again, what happens is you get sucked into looking at, okay, now I'm going to go trend trades, but you start doing it on the small chart for the wrong conditions at the wrong time, and then you end up losing. The other thing to note is where your synthetic triggers are in your crude oil. So not only do you only have 2 triggers passed, but you also have a huge gap to synthetic triggers, which means traditionally it's going to go down from that spot. Now, it doesn't always go down, and sometimes you win, but again, I understand the strong trigger look, and again, whether it wins or loses or anything else, you have to understand the probability. Coming off of multiple time frame Fibonacci resistance with not 4 triggers passed and a big gap back to the synthetic triggers creates a lower probability trend trade long. And if you win lower probability trend trades, what happens? You think you're a badass trader and you keep doing them and you end up losing all of your money. And 3 months down the road, you go, John, why am I losing all my money? And I say, well, you're probably not doing only high probability trend trades like these shorts over here. Anyway, food for thought. Do you guys quickly recognize the termination condition here inside this circle? 2 triggers past red fibs. It's not going up. I mean, if it does, it's lucky. So again, I understand the trade when you're staring at the small chart first, but when you stare at the big chart first, it eliminates, that trade. Win, lose, or draw. Everybody okay with that? And again, I'll give you guys a picture of that one too, just so you can add it to analysis or study it later as you see fit. All right, 2 more, and then we're caught up here, and then we'll look at the live market together. All right. I see what you're doing. And again, look, as far as background color and trigger direction and everything else, this is on the money, Dan. The only thing that I would say, look, I agree. Okay? The only thing that's the problem is you got in a little early before the Fib to Fib oscillator got up to 75, which should have put you in a little bit closer up here, closer to the 80 area. And that extra few ticks made all the difference in the world. Looks like you jumped back in again and you got it anyway, but again, I want to go kind of, if I may. Here, let's do this. I'm going to do something just a little bit different here. Bear with me, okay? Because this is going to be pretty good stuff, and I think it'll be really helpful. People do this a lot, so I want to really document this thing good. So again, it's hard to argue with a man who makes, $450 on a trade, right? So, I mean, that's kind of the, the difficulty in what we're about to do here. But where did that darn picture go? Shoot, I don't know where I saved that picture. Aha, okay, found it. All right, so I'm going to blow this up a little bit here, just so we can see. I'm going to take another picture here with the blown up version of the 5-1 chart. So we agreed that the larger chart's all set down, so we can go with that, okay? So look, because you got in a little too early, right? So look what happened. You got stopped out on the high tick, or you got in, it looks like you got in some more, and then you got stopped out on the high tick. And then you got back in again, I guess, right up here at the top. So again, look, this all would have been eliminated had you just got in at the right spot under the right conditions. This wouldn't have happened. And then here's the add-on that I wanted to kind of visualize for you guys. Yeah, it's a little too early, but I want everybody else who's new to understand why. Because the rules are for a trend trade is 14.282 and then 5.1 fib to fib oscillator. That's this little thing down here at the bottom. Needs to be at 75. I mean, there's a couple of exceptions if like all 5 charts are in a number 1 look, but. And then look, you always have 2 choices, right? Is it or 3 choices? Is it the fib? Is it the other line, or is it the midband? And again, when the fib to fib oscillator isn't quite there yet, choose the farther away one that's inside of those 8-2 triggers, and you end up at the right spot better. Now, let's just go on the assumption that everything else was okay, and you wanted to add on to a position. This is the look that we've discussed many, many times, and again, it's not an official trade, but if you miss something or you're coming off of the best area on the planet, this is the kind of bonus look, if you will. I don't know what else to call it. Do you guys see where I'm talking about right here? The triggers are down super, super, super strong, and you get this little stab back right to resistance with everything going down. If you were going to add on to a position, that is the look to add on to your position. Do you guys see what I'm talking about? I mean, it's hard to describe, but it's like super strong down trigger breakout with a quick. And you see this a lot when you have major areas at the tops or bottoms, and you'll get a really sharp move and a quick stab back. That's the spot where you put a limit order at 72 and you add on to your position. After everything's going your way and everything's going down, adding on when it's going up sometimes is not always the most efficient. So again, triggers down, sell resistance. Sounds familiar, right? But again, the trade, I don't want to confuse you guys, because this is where the trade should have been once the fib to fib oscillator hit 75. So it should have been from a higher spot, and then this is the most proficient add-on you can put on. Anyway, I just wanted to kind of highlight that since it looks really, really good. And, again, you'll see that same look all the time. Look, this is the live mini ES. So micro ES. You guys don't ever go micro ES, do you? So look, we put in a termination condition at the bottom on the big chart. Just trust me on this, okay? And this is that same little stab long look right here. It's not an official trend trade, but when you come off of a major top or bottom, you can take that trade. Look, here's the micro ES bottom. So again, look, I want you to really contextually keep this into, you have to have a, what you would deem a solid bottom or a top before you can get away with that. And sometimes when you get a solid bottom like this, they run away really quickly. And if they run away really quickly, sometimes you can take advantage of that. If you have perfect areas in that trigger, you can get away with it. And then look, you don't get too greedy with it, because they're going to go up, and then, then you're going to get the pullback into the spot where you're going to take your next long trade. Usually any bottom that comes in really solid, you end up with one really good long trade from it. Anyway, we'll watch, but I just wanted you to see, look, that's the same look, and it's because you were already in a winning trade and everything was already going your way. That's why you can get away with it. All right, closing this out. Now, here's where we're at on crude oil live. Again, there's a lot of action. Obviously, early, these were the long trades that people were doing. We broke through, and again, mid bands for one more push up. Now that we've had divergence and resistance, you guys were going short in here somewhere. Again, good looks. We kind of broke support, and the mid band is holding resistance, which is really nice. And now we have what? We have a solid bottom, a termination bottom at the moment, right? We have fibs that have been hit with divergence. Again, look at the top, guys. Not one time did you have a negative number on the tops until the top. Is it a coincidence that you actually had divergence at the top? And then no divergence all the way down. And then all of a sudden, look what happened. You had divergence at the bottom. Is it a coincidence? I don't think so. So look, if you have divergence from a fib area, guess what? We start to say to ourselves, hey, we may have made a bottom, right? So right now we're really gearing up towards, we'll see. I mean, look, if they take this out, then we'll deal with it the way it goes. What's the rule when you hit a fib area, guys? Count the triggers. Man, my fingers are not working right here. Count the triggers. Count the triggers. Are you going to get another trade? If you get to a fib, count the triggers. You'll know whether you should go short again or not. If you guys, I cleaned out my charts and started over from scratch this morning because my workspace was corrupted. So I cleaned out my data, cleaned out my workspaces, cleaned out everything from ground zero. And if you guys have technical support issues, just say I need tech support help and we'll get you to tech support. So when you count the triggers and the divergence, you can say that we have a situation where we're not going to go short anymore. You guys see what I'm talking about? And again, you have to have absolutes in your life when you're trading. This is an absolute. You absolutely are not going to go short anymore no matter what. Now, just like we talked about in the S&P, again, this is the micro S&P, but I thought I'd pull it out because I think you guys would think it's fun, just to kind of see a micro S&P. Same thing, as the big S&P for the most part. Sometimes a little, look, people go, well, the fibs are a little bit different or the triggers are a little bit different. It's a different market, guys. Yes, they're both S&Ps, but they're literally a different market. So, again, you have to trade each chart as its own entity. You can't trade a little micro S&P based on your big charts. Just trade it on your small chart. You can, but again, look, absolutes, guys. Fibs hold, no triggers break through. What happens? Fibs hold, no triggers break through. What happens? Fibs hold, they broke through, but they broke back up through. And again, I think you can really see this probably a little better even on the 8-2 chart. Look at the 8-2 chart. We held support, eventually we rolled, and then off to the races like we were talking about. That's all we're looking for, guys. When do we have an absolute that we can deal with? Fibs holding with divergence or fibs holding with the triggers becomes an absolute. No triggers passed and divergence, we're going up. Now, here's where, the trickiness comes in. With the transition of our trigger lines, do we want to buy again? Yeah, today for some reason there was a big Windows update, and I don't know if it corrupted my workspaces or what, but it is what it is. Anyway, look, when you look at the chart, this is the 8-2 now. I want you to see, again, should we be going long based on this look? Yes or no? The answer is yes, obviously. So look, our trend trade rules are pretty simple. We want to buy the mid bands and fibs, which is right here, right? I don't have a ATM on. So look, I'm missing it right now. Damn it. Darn it. So you guys see what I'm saying? Look, we're buying the mid band and the fibs on the way down into it with the strong triggers with the hopes that we're going to go up again. Again, look, every trade has the potential to lose. Okay? So again, there's no such thing as a guaranteed winner, so to speak. So what we're trying to do is we're trying to put ourselves into a situation where we've got, again, look, when you do a trade, I don't care if it wins or loses, guys. Here's what I want from you guys, okay? Let me take a picture here real quick. I want you to be able to take a picture of all of your charts, and I want you to label, especially if you're new, just listen to what I'm saying, because again, I don't care if a trade wins or loses. I care more about mechanics. So I want you to be able to label your trigger line situation on your large chart. Transition triggers. And I want you to label the trigger line situation on your 8-2 chart. And then I want you to say why you bought at this area. Fibs plus midband plus triggers plus fib to fib at 25. Okay? Everybody with me on this? And again, it's vitally, you don't have to do it while you're in the trade, because when you're in the trade, you need to be trading. Okay? When you're in the trade, if you're worried about typing and doing pictures and all that, trade first, do pictures later. But what I want from you guys is I want this picture on all three charts. I want to see your entry, the buys and sells. And I want to see the rationale on why you did it. Because when we look at rules for trades, right? So we haven't gotten to the plan yet, but we'll go through the plan. The idea for a trend trade is that we have the correct initial trigger line look on our large chart. So we've already labeled that we have a transition trigger on our large chart. Check. The second thing is make sure that we didn't hit our target or something happens on the smaller charts to tell us that we're into the trend. We don't have that. And then ultimately, the third thing that we're going to be doing is we're going to check the strength of our 8-2 chart against our 5-1. If the 8-2 chart small triggers are strong, we're going to have a shallower retracement. If the 8-2 trigger lines are a little weaker or pinching and turning, we're going to have a much deeper retracement. So this is where it goes. So we're going from big trigger configuration to looking at the big trigger transition. What are the triggers doing on the 8-2 chart? And then ultimately, do I have rules met on the 5-1 chart for a trade setup? Everybody with me on this? Everybody can label a winner after the trade happens. Agreed? It's not that difficult to go back in time and go, oh, look, there was a winner. The difference is when you guys do your pictures, if you take a picture at the moment you get in, just take a picture and then take a picture after the fact. You can't bullshit yourself when you're doing the picture at the live spot. So when you go back to the live market, you say to yourself, did I do the right trade? Were the rules right? Was everything right? Did I do everything the way I was supposed to do it? And if the answer is yes, then, hooray, and you make a bunch of money and everybody's happy. Yeah, I guess we have a second pivot to trail our stop behind. So look, we have literally what? We had 10 ticks risk. Now we have a whopping 3 ticks risk behind a new pivot. If you get a new pivot, you get to trail. And then you end up with the correct trade. And look, you can take a picture after the fact if you wish. I think the trade, at the time of entry is real. Look, it's easy to go back in history and go, well, there was a trade and everything was okay over here. And then that was my trend trade long rules. It's really easy to see after the fact. Everybody can see it after the fact. And I'm gonna write the same words. 8-2 small triggers above all. And then 5-1 trend trade rules met. And again, then you post in the picture and you go, okay, John, you don't even have to post in a picture because you did it right. I mean, I don't need feedback. I don't need kudos. I don't need anything. I know I did the same. I know I followed the rules. I wrote the rules. Do you guys see where the rules were met? Large chart triggers and trends, small charts, agreed, easy money, not getting greedy, just taking 20 ticks. Again, could it go further? Sure, it could go all the way up to fibs. I mean, if you wanted to hold on for, 73 or higher, knock yourself out. I don't really like holding past anything that could be trouble. So again, we have a divergence line, probably get to the fibs, I would imagine, but who cares? You only need 2 of these a day, and you end up with what? A daily goal. So does everybody understand this trade? And again, it's kind of nice when you talk about it and it unfolds and you put it together. And does everybody understand it? Because again, you don't have the writing all on your chart. You have to be able to say the rules were, the rules were, the rules were. And then you end up with the right trade almost every time. Whether it wins or loses. Now, so look, the second part of what I want you to do is not just take a picture. I want you to be able to go in and I want you to track. And look, if you still have not done this yet, you must do this. Right? You have to do this over and over and over and over again. If you haven't done it, you're going to have to do it, period. I mean, look, I'll give you the link to this. You can go back in history. And again, this is why we do the pictures, guys. Because look, when we go back and we talk about people's trades, right? So we're going back through history this morning. Look at how perfect this trade was. It's the same trade, but it was the reverse of what we just did. And then when we go look at the trades that are right, they all have the same look. And then when we go look at the trades that are wrong, they all have the opposite look for all intents and purposes. Selena, do you see I'm going back to kind of to your picture here, not to pick on you or anything, but look at how obvious it was that this long trade right here was wrong. And again, that's what I think really sets us apart is we have the most dynamic software on the planet. The fib areas change, the triggers change, the market flow changes. Everything is truly 100% dynamic. Every 4 hours, the fibs update. We stay right on top of the market at all times. We don't have to do analysis like where's my support, where's my resistance. We have tens of thousands of, little algorithms in there working for us doing their thing. All we need to do is, do we have the rules met for a proper trade? Do we have the right triggers on both charts, 14.282, and then do we have the right pullback on the 5-1 chart? That's all you need. Could you have held for 73? Sure. If you did, congratulations, you made more money. And again, look, whether you take 20 or whether you take 30, there are different circumstances for different types of trades, right? So look, can we agree that this is the edge of fibs? So watch. This is the edge of fibs, right? We have resistance on all of our charts, agreed? So now we're talking about counter trend trades. So we have to evaluate our triggers. Look, the first thing I see is the synthetic triggers way down here. So that tells me that there's a big gap back to my synthetic triggers and that we're at the edge of resistance. And I know that if I get a divergence at resistance, that my rules are going to say I should go short right here. Not a guarantee of a win. There's no such thing as a guarantee of a win, but the rules say, again, let me pull up the rule. It's a picture. It's got to be a picture in your head, guys, because it's really easy. Look, to trade from the edges in the plan, blah, 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 we'll go through it quickly. You have to have this look. And look, the look is the same thing every single time, and it's the same, sometimes there's a little more distance between the pivots, but it's the same thing every time. You're going to reach resistance, right? You're going to have a favorable 14-2 chart, like a big gap or, not pushing really hard. Edge of fibs. You can't get in early. I saw one earlier today where you got in early and it wasn't the edge and you end up losing. So it has to be the edge of fibs, then put in divergence, which is the negative number, right? And then retest of that line is your limit order to sell. So essentially, maybe if it's a really good situation, you can get in a little bit below there or you may miss it. But you're basically demanding that you have this type of look at the top because you know it's going to win. You just know it's going to win. And if it doesn't, no, I'm seeing it. I don't want to go that far yet. If it doesn't win, then no big deal, right? You're going to lose 10 ticks. You just made 20 or 30 going long. Almost every counter trend trade has a great trend trade right in front of it. So if you can switch your brain around from going long to going short, and if you can't switch your brain, just do trend trades. But almost every, edge trade has a great trend trade to get there, or 2 or 3, right? So if you do 2 or 3 long trades to get up to there, then you're up $400 or $500. You're going to risk 10 of it. If it works, you're going to make 20 or 30 more, and if you lose it, you're going to lose 10. More importantly, the market is going to break out if you lose. And Selena, this is why we say one and done on counter trend trades, because we're truly at the edge. You know what I mean? And when you're truly at the edge, only one of two things going to happen. You're going to get rich, making a bunch of money coming off of the edge, or you're going to lose 10 ticks, but you're going to get a trend change, which will immediately, turn into what we call the apology. Usually when we break multiple fibs, you get a trend trade going in that direction. They have a tendency to apologize if you have a loser at the edges, usually. So again, they all look the same, guys. They're always going to look the same. It's never the, this is the short. Do you guys understand it? And again, if you have divergence at the edges of fibs, a lot of people are going to sell a pullback right there and make that first money. Did you guys go short over here? What did you guys do? Melby, let me see your trade. Thank you for posting in. All right. All right. Melby, look. I'm going to answer your question. Really good question, and this is a really hot topic for a lot of people, okay? There's two things that are going to answer the question. Number one, if your areas are inside the dotted triggers, use those areas. That's the first piece of the puzzle for you, okay? So again, I just want to make it very visual. You put your order below the fibs, midband, and triggers. I mean, this is what we used to call a stacked area. So again, when you have your triggers, again, the dotted triggers, I'll get rid of that box so you can see, look. In between these two dotted triggers, you have your midband and fib. That should have been your entry point right there. You were trying to go for the bottom of the area, which just means what? I mean, I would have been okay had you bought one at 39 and then another one at 31. You could have maybe added on to the position. So again, you were just looking a little too low. Now, the second piece of this, okay, David B., I'll help you out. Hang tight. Give me 2 seconds on this one, okay, and I'll help you out. So again, look, inside the triggers is the answer to your question, the 8-2 triggers. So that's the first half, okay? And again, look, I want to give you the second half of your question, which is, and again, look, Milby, that's your first picture. This is your second picture right here. The 8-2 chart also helps us out with how deep of or shallow of a retracement. So where the small triggers, location of small triggers above all means shallower retracement. So do you see how the small triggers are physically above all of the other triggers? That traditionally for us means that you're going to have a shallower retracement. It's kind of a measure of strength, if you will. Selena, yes, is the answer to your question. If you reach your goal, you should keep trading as long as you're doing the correct trades. Because there's many, many days, especially when you get high volatility, that you're going to make $1,000 or $2,000 a contract. You need those days to offset any type of bad day you might have. So again, look, when you look at this in its totality now, and again, look, I want to go back to the picture that I did for you, if you don't mind. This was the picture at the time of entry. Milby. Transition triggers, strong, small triggers above all. So I even wrote it in at that time. And then fibs, midbands, and the triggers at the same spot for the entry. You see it? And again, this is where the 8-2 chart comes in, kind of a filter for us to tell us how shallow or deep the retracement's going to be. But you also really, fibs and midbands inside of those triggers, that's the look that you really want to have. You okay, Milby, with that? Just want to make sure we answered all your questions there. All right, now, somebody asked the question that they're ready to post their first picture, so I appreciate you wanting to share, David. Give me 1 second, and I'm going to pull up Jing. I don't have it, so I'm going to pull it up. Or I don't have it running. I use Snagit. It's a little less buggy, but it's not free. So when you use your Jing, again, there's two things. So look, this little sun up here for posting pictures. I mean, this is an invaluable tool. First things first, if you hit the little cogs, they have what's called help. And in the help center, just so you have this, check it out. They have all of this documented in pictures and videos, of course, since that's what they do. Taking captures, capturing things, capturing images, videos, sharing to screencast. And again, that's what you need to do right here, just so you know where it is. Screencast.com. If you haven't signed up for a screencast.com account, it's free as well. Of course, I've already got mine set up. So anyway, go to screencast.com, make sure you have your account set up. So then what you do with Jing, look, so we're about to get our counter trend trade. So watch, let me just document it while we're doing it here. So again, look, when you have Jing, now I got to do real quick. Let me go trend trade long. Trend trade long, perfect. And then we're going to go edge of fibs. So look, again, look, edge of fibs. Prior divergence. Limit order at the top at the line for edge trade short. Okay? So again, you can draw in little pictures and, squares and tools and all that kind of stuff too. But then look, so now once you have your picture down here at the bottom left, do you see where I'm pointing down here? Share via screencast. This little thing will upload it to your screencast account. And then once it's done uploading, then you can right click and paste, or control V if you will, and it'll bring that screencast up for you. So it basically creates the hyperlink for you, and then you just copy paste it in. So again, if you can go into the Jing, and you can go to your history. So, and again, this is also a good place to have a lot of history. So you can have older pictures, and you could share any of your older pictures. Let's say you go through and you do a bunch of pictures for study work, you know what I mean, over time. And you say, hey, let me check, whatever, blah, 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 whatever. You can share any picture from any time out of your history with anybody. Anyway, it just makes it very easy for you to go in and share, like if you do, let's just say, a market recap like this one I did. And we talked about all the trades. I made a little video and stuff like that. So anyway. All right. Now, unfortunately, I didn't manage that very well. Look, here's the problem with counter trend trades. If the conditions change on you, which, of course, this is going to be an after-the-fact management lesson, so there's nothing I can do about it now. If the conditions change on you and you get a pullback to your fibs, what should you do? You should manage. Well, did you sign up for a screencast account, David? Do you have a screencast account? You do? Okay, are you signed into it? So on Jing, you should have to sign in. It's been so long since I've done it. So, like, I have my account hooked up to my Jing, which is my email address, and going to my account. And then you should be able to go in and put your username and password in on your Jing for your screencast account, and then it'll upload to the right spot. And who are you working with? Just help me out. I'll have somebody get on with you if you need help. Cameron? All right. I'll have him buzz you in just a few and just kind of get on with you real quick and help you out if you need it, okay? Just let me know. All right, so again, look, unfortunately, we were talking, and again, look, I'm on simulator, so the rules are the rules are the rules. You know, what happens? I mean, I lost the trade, obviously, but look, there was an opportunity in here for some management to not lose. Do you guys see it? Again, this is a real good look for when to manage your trade, obviously. Again, I didn't do it because we were talking about lessons, but it doesn't matter. I'm not calling trades for you guys. I'm teaching you the rules. I wish I was watching and then I could have showed you how to manage it live, but I have to do it, unfortunately, after the fact right now. So look, if you're short, and again, you'll see this in all the videos and everything else, but if you're short, and then again, you have to have something clear that you can work with, or else you're not going to be able to get away with this, right? So again, hopefully the management portion of this is really clear where, we had the opportunity to get out of our short trade. Right? So again, there was an opportunity to get out break even, to not lose 10 ticks here. Unfortunately, it is what it is. I'm okay with it. Yeah, just, I'm not trading, so I don't have a full. This is a good little example of management, number one. And then Eddie, I need to go back and look at this. The other part about trading counter trend trades is what? So again, look, this is again why it's important to post pictures. I want you guys to see something here. Check it out. Remember my lesson from earlier this morning? And again, look, if it's not the right trade, it's not the right trade for everybody. So look, I want you to go back and remember what I said, Selena, to you this morning about not going short against strong trigger lines. Look, I wrote the software. I wrote the stupid rules. And I want you to see what happens when the guy that wrote the stupid rules does the stupid trade. I said stupid. It's okay. How about wrong? Is it correct? And again, this is why you take pictures and you can, there was a management opportunity, of course, but is this the correct trigger line configuration for counter trend trade shorts? So again, look, this is a good lesson for you guys right here. Look at where the small triggers are located and how strong they are going up. And then for us, what do we really want to see for counter trend trades if we're going to do them on the 14-2 chart? You'll see it and it's going to be obvious to you now, but look, weakened inside triggers create a better counter trend trade opportunity. Now, I'm not saying there was a counter trend trade there or anything else, but look at the difference in the triggers. One of them is strong and above, you're going to lose most of the time, and then one of them is inside, you have a different look. You guys see it? Long when everything is strong and up, not short when everything is strong and up, maybe even another long, who knows. And then ultimately, when they start to get weakened and inside, we have a better chance of a top being in place. Now, being fair, again, I broke the rules in this situation and I lost. Now, if I was really on my game or being assertive with my entry, saying I'm going to do it anyway and I'll manage it if I have an opportunity, that would have been my, get the heck out of that trade. So again, look at the trigger configuration. And again, when you go and you stare at your small chart only, you end up with some of the wrong trades. That's why it's really, really important that you look at all your charts. So again, look, these are the areas where we wrote on there where we have a weakened strong trigger and the result, and then we have a weakened trigger at a pivot stop out. Now, I'm not necessarily saying it's a short trade, but we did get a much better bounce with the weakened trigger, didn't we? So again, I want to really drive this point home. Look at the triggers here, and then look at the triggers here. And when you take that to your large chart, do you guys see the difference? Strong triggers, weakened triggers. Now, it still may go up, but the weakened triggers always has the better chance of going down. Now, when we go back to the plan, and again, look, I made a mistake. I didn't manage, whatever. We're teaching lessons. When we go to the plan and we look at it, the three things that we look for are what? We want the correct trigger line configuration. So if we have a strong trigger line look, a number one look, we want to go long, not short. Easy enough, right? Number two, if we have a transition trigger look, meaning the small triggers get below all of the other triggers, we have a potential short trade look. And then number three, if we have a weakening look, then this weakening look, when they're inside where we're at for support or resistance or tops or bottoms, plays into what we do. If support helps, then we still go long. If we have resistance, like we do on the 14-2 chart, let me load all the indicators back up here for you real quick. Give me 2 seconds. All right, give me just 2 seconds, guys, real quick. All right, sorry about that, guys. I apologize. Just had something pop up on me real quick. So, again, look, thought processes when you're looking at your big chart first. Again, one of the things that most people do when they make mistakes, when they start seeing the trend trades, right? They start seeing the spots where they're going to go long or short on the smaller chart, which is great. And what most newer users do, the mistakes that they start to make in the beginning, again, once you get the rules down, I guess the S&P is going down again. Once they get the rules down, they lose focus on the 14-2 chart first, and they'll do what looks like a perfect trend trade on the small chart or a perfect counter trend trade, but it ends up having the wrong conditions, if you will, on the larger chart. And again, when you have the wrong conditions on the larger chart, you end up doing the wrong trades most of the time. So, large chart first. When it has the right look, you're going to do trades. Small chart second. Everybody good with that thought process? All right, Robert. All right. David, I did tell Cameron to get with you too, by the way, just so you know. All right, Robert, this is a lot. Let me digest it. Long from the mid bands with the anticipation of going up, out at resistance, short at resistance, take a loser, but then long at support, and then take some winners. All right? Cool. So you did, and look, I know you like counter trend trades. So you took the counter trend trade, didn't really quite manage it. Maybe there were some management opportunities in there, either way. The nice thing is you were able to then turn around and take the trend trade with the trend. And again, this goes back to what I was saying just a little while ago, which is that almost every edge trade, not every, and again, you have to think about it in, maybe I exaggerate perspective here just a little bit. Many, many, many times when you have the edge of fibs break, right? So again, if you lost here, this is what I would deem the apology trade. Right? And the apology trade's kind of a jokingly way of saying that the edge of fibs broke, trade with the trend. Everybody okay with that? And again, when you have an edge trade, whether you win it, lose it, management, whatever, when you break fibs, you end up with another trend trade usually. And again, if you can pick that one up, you don't worry about the 10 you lost because you made another 20 and 30. And that's a really good thing. So again, I appreciate you posting that in, Robert. It's good to see both winners and losers. And look, which ones win, which ones lose, and why, and it becomes pretty obvious when you start looking at your charts. Once you have a general understanding of everything, of course. All right, so should we go long one more time? That was the question. And if so, where? Right? Because, look, this is the situation where we don't have a perfect scenario for getting in, do we? This is what I was telling Milby just a little while ago. Look, if you get in at the mid band, you don't really have any triggers helping you out, do you? And then if you try to get in at the fib, you didn't get hit. And now you have a background color that is not quite as favorable. Which means what? That means that the 8-2 chart is kind of rolled over on you. So again, look, let me give you a visual here. Do you see that the small triggers for the first time in a long time are now below the large triggers? What this means generally is that the market's going to make a bit of a deeper retracement before it goes up. So when the background color is red, we have to think to ourselves, okay, no more, shallow retracements on the small chart. If you're in at the mid band, I don't think it hurts you necessarily, right? But you now have a different situation. If you're long, you're in a red background and you have potential divergence. What are you going to do? If you're long and it keeps going up, you're going to be happy. No big deal. If you get actual divergence, then you're going to have to change your mind. So the question will be, are you going to get real divergence to pop up? And if so, it's going to just take us down to a lower spot, which is okay. Did anybody buy the mid-band one more time? I'm just curious. Again, when you were buying it, it probably looked like that. And then, as you go forward, you can see the conditions change. So if you're long, again, you've got a pivot in place. And, again, you want it to continue up. No? All right. There wasn't as much synergy there as there normally is, right? And again, people go, well, what do I do if it's not lining up perfect? I didn't get exactly what I wanted. What do you do? Wait. Sit and wait. It's the only thing you can do, isn't it? You don't really have another choice other than just sit and wait. There'll be another one. Now, I want to add one more thing for you guys. Again, I want to go through the process of the training. I really, really, really feel strongly that you should get this spreadsheet. If you don't have it yet, get a copy for yourself. To download a copy for yourself, look, go to File, Download, and then whatever your, whether you have Open Document or Excel or however you do it. Probably Excel or Open Document, I would imagine. And once you do that, then you can go in and you can actually download it, unblock it, and then you can edit it. And what we want you to do is we want you to take what you do during the day live and take pictures of the trades that you do, good, bad, or indifferent, and track your results. How much did you make? Take pictures of your trades. If there was any really good lessons or things that you got from your pictures, like feedback that we give you in class. If you were short, just this is kind of the same thought we just spoke about, right? If you were short, take a graceful exit when the conditions are against you, obviously. Again, this little spreadsheet here has most of the major, things that we talk about already, really good examples from class. So it's not like you really have to come up with much on your own. Once you know the rules and once you know all the bits and pieces, then it's, real world application. Now, I tell people this, and again, some say right away they're going to do it, and then some say that they're not going to do it, and and again, everybody's going to be a little bit different on the amount of time that they can put in, but everybody really kind of needs to do the same thing to get better. Learn the rules, practice the rules in a live environment. Going back in history and saying I shoulda, coulda, woulda, it doesn't really make you a better trader. Money is going to be made on what's happening live right now. At this very moment in time, on the right edge of your chart, that's when you make your decisions. And you have to be able to analyze your charts, in the real time. And look, you should be able to envision where you're going to be if it works. Right? Just like when we did this long trade. I envisioned us going up to 54.73, but it was because of the look. And again, you'll see the same thing over and over and over again. Every time you make a mistake and you take a picture, you write a little thing and you say, hey, if you're short, when the fibs change color and the background changes color, get out. Right? So this is a good, right? So again, this is a lesson that's a good lesson. And, again, if you have your spreadsheet and that lesson applies to you, then look, watch. Edge trade exit. And you can just go like that. And, again, if you download this, now you have it. But anyway, you guys get the idea, right? Do the same thing over and over and over and over. Make sure the looks are correct. Take pictures of the correct trades or any, feedback that you get that will help you. Once you guarantee yourself you can win, then you're ready to go trade live money. And you're ready to go make your fortune. Now, the process to get there, guys, I want you to think about something. Looks like we're starting to slow down, but look, the process or the path, if you will, timeline wise. And again, this is dependent, some of it on how much experience you have and how quick you are on the uptake. Some of you guys are not as quick on the uptake, and some of you guys are better at following rules. Do the demo. You're going to have to decide whether our software and education and everything that we do is worth the effort. Not just money, but the effort. You're going to have to put in effort on top of money to make it work. And a realistic timeline after your demo is to take the first month and to really sort out what's yours and what's not yours and which trade is the one that you like and which ones do you lose most of the time. And after a full month of the same thing every day, you pretty much figure out exactly what's right for you, and what your personality can handle. Then, generally, 60 days to 120 days practicing on simulator. And you can't practice the wrong trades. A lot of people will go in and practice the wrong trades, Like I had somebody send me their first trade ever. And it was totally wrong. It didn't follow any of the rules. And, again, if you go 3 months before you get feedback and you realize you've been doing the wrong trades for 3 months, that's really an issue, isn't it? I mean, when you imagine that if you have been doing the wrong trades for 3 months, you've wasted 3 months of your life. So again, when you're, looking at areas, you have to say to yourself, what's the look of the indicators? Do I want to go long? Do I not want to go long? Again, pivot stop out at the top. Triggers weakening on the 8-2 chart. Obviously, we're going to make a deeper pullback. Generally, we get to the mid band on the big chart. Generally. So I would imagine that right here, mid band, and look, it's a trend trade on the big chart. Maybe. Triggers are going up, mid band and fibs inside of the trigger lines. This will be your trend trade long on the 14-2 chart. Can you see it? Inside the triggers, trend trade long. So it'll probably be 63, give or take. Now, how do you know if a 14-2 trend trade is going to win? Well, the same way you know if a 5-1 trend trade is going to win. You have to look at a bigger chart. So what's bigger than a 14-2 chart? Well, 14-2 is one size. A 21-3 chart is bigger, right? So let's do that real quick. We'll determine whether or not 5460 area is going to hold. You ready? Here, we'll do it together. And again, look, I don't normally look at a 21-3 chart, but if you're asking yourself if an area is going to hold, we have to go in with probability. So let's look at the fibs and the triggers on the 21 chart. What do you think about the area? So what do you think about these triggers, guys? Is this the correct trigger line configuration to think that the trend trade spot on the big chart is going to hold? What do you guys think? Is it right? Is it wrong? Watch, you'll see this happen a lot on a 14-2 chart. I won't worry about trading. But look, if you have a 21-3 chart and you have a 14-2 trend trade and it looks like that, you usually end up winning it. If you have a 14-2 trend trade and you have a chart that looks like this, you usually end up winning it. If you have a 14-2 spot and you have triggers that look like that, you usually end up winning it. If you have a 14-2 trend trade spot and it looks like that, you usually end up winning it. Now, same thing going forward. When you have a 14-2 trend trade spot and it looks like that, you normally end up winning it. It's the same logic, it's just a bigger chart. So, again, do you want to do short trades after you hit support and your triggers are going up on your big chart? Not really. This is a termination condition for us, isn't it? Fibs and mid bands and triggers and the bigger charts are up. Could we go down? Sure. This is where people will look at their little chart and they'll start thinking to themselves, you know what? I'm going to do a trend trade short. And again, you're not really looking for a trend trade short. What you're looking for is some type of a pivot stop out or something in this. You're really going to have to break below this window to really get easier short trades. Does that make sense? So because of the big chart areas, you're going to basically get into this window, and then usually you're going to wait for it to turn, and then you're going to start going long again till you get up to the next fib area. All right, SIVA, let's take a look. And again, look, Siva has locked himself into using range charts over the years. And again, there's nothing wrong with a range chart. He still uses fibs and triggers and pivot stop outs and stuff like that. He's not changing the logic on what he's doing. And again, the whole thought process is triggers are going down. He's selling a pullback. That pullback just so, again, he doesn't use the Renko bars, but, he got started in the Nexgen fires in 2004, 2005. So again, he's had software for a long time. And anyway, look, large charts going down, so he does a pivot stop out on the small chart for a short trade at resistance. What do you guys think? Could you justify that? And then large chart going down, 21 range, he sells a pullback to a mid band and a pivot stop out for shorts. It's the same thing. It's just different charts. So don't let it freak you out. He's still following the rules. He's just doing it on a range chart, not a dynamic Renko chart. And again, he's followed his own rules for 15 years, so can't really argue. And he's making money, so you can't argue. Pivot stop out short on crude at the top and out at support. All right. Nice job, Siva. All right, Carlos, question in the picture. I don't think, Carlos, the rules are met or they aren't met. Right? So what are the rules for a trade? And again, this is kind of an example of what I just told Milby. What are the rules for a trade? You want to go short, right? So do you want to sell the fibs or do you want to sell after it pulls back to the triggers? It doesn't really matter as long as you don't get stopped out, does it? I mean, if you sold here, it's a really good spot, but you have to really, again, you don't put your stop at the perfect spot. Usually when there's the big gap to the triggers, they close the gap first. I've said it in about 1,000 videos over time. So again, while this is the best looking fib spot, sometimes they overrun to get to the triggers first and then they go. You understand? So again, I think that, again, look, this and the pivot stop out over here terminate the trend. And again, this is a good spot, but this one satisfies the gap to the triggers. So if you lost, you have to do it twice. I mean, it's just the only way around it. And then ultimately, this one right here, when the triggers break through, are your high probability trades. But I like the deeper pullback into the triggers first. And again, the reason I say that is because, kind of like what I was telling Milby, but look, from the year, this is a page out of our trading plan from the year 2004. We wait for the area to hold, and then we sell a pullback inside the trigger lines when they're going down. It's been this way for 15 years, guys. So, again, that inside of the trigger thing usually works out really, really well. And again, this is the same logic right here. Inside the triggers usually works out really, really well. Obviously it did. Does that answer your question, Carlos? Again, I always like to make sure you answered the question. And all right, look at that. Pivot stop out long. Whoa, whoa, whoa. Huh. So we decided that this area was going to be a spot for us to go long. Did you guys go long? Pivot stop out, edge trade long. Eddie at 64. All right, cool. Now, again, you're against the trend and you got some things that you have to get through, right? So, again, this is one and done. If it doesn't work, then the party's going to be over. So, this is a little bit of a different style of an edge trade. I want you to think about this. The trade is an attempt Hey, come on, fingers. So it's an attempt at buying the trend trade on the 21-3 chart to take us up to the next level. Vinicio, all right, I'll take a look at yours. Selena, cool, thank you. Have a nice day. We'll do it again. So again, look, this is kind of the same thing over here where we've got, let's see if we got it. The same thought process on kind of what we were talking about before. Having a strong trigger line look on the larger 21-3 chart, an attempt to buy the mid bands and fibs and trigger area on the 14-2 chart. And ultimately using a pivot stop out on the 5-1 chart as the actual entry. Does everybody understand this? Because this is pretty much exactly what's happening right now. We've already discussed the 21-3 chart having more favorability to the upside. Right? So if you're going to think about doing a 14-2 trend trade, have a favorable trigger. We've already discussed that. And then second, we've got the area that we discussed. I mean, what did we say? 62, 63 is probably the right spot, give or take. Milby, I want this to reinforce the lesson that I gave to you earlier. Kind of the same thing that you were doing on the 14-2 chart. That's why it's 73 is not the area and 62 is the area. Do you see the difference there, Melby? This one is inside the trigger, so you have a better chance than just this fib over here all by itself. So you have more of a stacked area. You still have the fib. And technically, look, most of your triggers didn't even break the fib. So you still have the fib, but this really catches the overrun. And, if all goes well, we'll go up. Now, entry timing. Again, pivot stop out from the edge. And then, look, one of two things is going to happen. It's either going to go up or we're going to fail, and then that'll be it. And, again, look, if that's it, you can see where we might potentially fail from. We'll see. They have to take out the low, but what would be next, guys? Let's just say this doesn't work and Eddie's 64 long loses 5 ticks. Not the end of the world, right? Visually, you would have to see something like this. You'd have to see the market go up, right? Turn background green. Then you get an easier long. Instead of trying to catch the bottom, come on, Johnny. There you go. Instead of trying to catch the bottom, you say, okay, I'm going to do a little more conservative approach, and I'm going to wait for the background color to turn green. You guys understand this? Again, it's just kind of delaying what's going to happen over here with a little more confirmation. And then, you're not totally trading against all of the trend here. And look, if you do it and you lose, no big deal. Or you do it and you get to, lower risk, no big deal. What do you do if it doesn't work? You don't keep doing long trades. You don't do 5 long trades in a row because you're going to get your ass kicked. Eddie got out break even. Cool. Oops, sorry, I meant to click on Venicio's chart. Venicio, again, I appreciate you posting. Let's see what you're up to here. That was my picture. Did I miss something, Venicio? That was my picture. Did you have a question about my picture? It looks pretty though, doesn't it? Long, management, short, target, short with the triggers going down, short with the triggers going down, short with the triggers going down. Pivot stop out long at the edge, break through, trend trade long, take a target at the target, one more long to the edge. Short, short after the triggers roll. Obviously, a lot of money in that picture. Yep, that was wrong picture, but it's a pretty picture nonetheless. All right, so we're kind of in this, we're in a stuck spot here at the moment, guys. Because technically we can't go short because we're at such a good support spot, right? So we need one of two things to happen. Either the trigger lines to transition to the downside, which means the small triggers will get below here. And if that happens, then we'll do short trades pretty easily. Right? And again, some people like to attempt the, buying the bottom, and if it doesn't work, it doesn't work. You don't get too married to it because, look, the attempt at buying the bottom, look what it ran into. And he got to break even. I mean, I think that's awesome management, Eddie, so nice job there. And again, look, if we start to transition and break through our synthetic triggers, it's obvious that longs aren't going to be the case. Which is fine. I mean, look, path of least resistance lately has been to the downside. Can we definitively say we have a transition, yay or nay? Transition? See how easy that is? Transition. Now, because we're in a transition, we can do a trade unless the small charts run into support and stop us. So the small charts can still terminate a down transition. Venecia, right picture. Let me take a peek. Not at all. Venecia, look, this goes back to like 22 years ago. Look, the thought process is, trying to or attempting to determine how strong the triggers are at any given fib area, small triggers. Okay? And if the small triggers don't break the fib area at all, we traditionally don't break the fib. And on a retest of the fib, we get the best pivot stop out counter trend trades we can do. If the market is really strong into a fib area, if you haven't reached the fib area yet, you can still do a long trade. If the triggers get way past the fib area, then potentially we could do a long, but you have to be very careful because the fib didn't change colors. And then ultimately, if the small triggers get below the fib again, then it'll end up holding. So sometimes it's a divergence and a double top, and then you can go short. Now, this is where momentum plays a factor, Venicio. The more momentum you have into a fib area, meaning, 20 or 30 bars down into a fib area, assuming this is like a 14-2 chart, just because the fib is blue, the more the small triggers are nipping below it, the more likely it is to break, and you want to go ahead and sell one attempt anyway in that situation. So you can't wait for the rest of the bus to catch up, You have to trade the immediate, what's happening right now, and then you have to manage that, accordingly. So again, when it's this strong, we're going to take an attempt on a pullback to break the fib because the triggers are so strong into it. Does that make sense? When we look at your picture, it's the same thing. Where did we come from? Well, we came from divergence at the high. How much momentum did we have to the downside? We had a lot of momentum. Agreed? The small triggers themselves were physically already way below everything, so we want to take an attempt at a short to break the fib before it breaks, because we already know that because of the location of the triggers and strength of the triggers that it's probably going to break. So again, we've been doing this for like 15 years with the same thought process. But again, you'll start to see the same thing over and over and over. If the triggers aren't breaking the fib at all, you have to be worried. So look at the difference. Even if it's strong down, if the triggers aren't already past the fib or nipping past the fib, you're probably going to hold it. Same fib line, different triggers. Try to jump the breakout, basically, is what we're doing, Vinicio. Does that make sense? Now, when this goes back to the plan, look, here it is in the plan on the trend trades. And again, look, I made even a better picture in our... So look, strong triggers down, even though everything's still way up here, we're trying to jump the breakout of the fib. So we're going to do one attempt, and then these are the one and done type things. If the one and done doesn't actually change the color of the fib, then we don't do it again. In your case, the one and done would have broken the color, so it's okay. It followed through. So again, you can still do the trade, but you have to manage it, again, based on what happens. So if you do it and you end up with a double divergence pivot stop out on the lows without changing the color, you got to get out and don't do it again. So you have to treat the non-color change differently. But we love this look because, look, it's going to give you at least one winner. And if it keeps going, maybe more winners. And again, usually that much momentum, we have plenty of time and ability to manage a trade. Very rarely it happens, but rarely do we get our ass just trampled on and run over when it's that strong to the downside. Usually from fibs and mid bands and triggers, we usually get some kind of bounce. I mean, every once in a while they win and run us over, but it's really rare. So you have to go in with, all the confidence in the world that this is going to be the absolute high and you're just going to break the fib. And, if it doesn't, you can deal with it, but that's later. Helpful, hopefully. All right. So we got to, again, this is kind of the same thing over here where, I kind of messed up obviously earlier, but look, same thing right here, Vinicio. You see how strong that trigger is and it's already through the fib? This is where, one more attempt at a long trade usually gets you extra money. Even though you have a fib and things aren't quite caught up, that ultra strength through the fib usually gives you one more. All right, so unfortunately, this is the darn trouble. What's the trouble here, guys? We're in a transition look. Agree on the big chart? And transition still transition as long as the synthetic triggers are still going up. So we're in a transition. And when we're in a transition, sometimes the small charts can terminate the transition. Again, do you guys understand this? Because we're in a transition look, which It just means that we haven't yet changed the synthetic triggers. Doesn't mean we won't. But usually when we start running into supports on the smaller chart, our transition has more of a chance of, reversing to the upside. So, I would anticipate that as long as these synthetic triggers are up here, we'll have more of a chance of a long trade from down here. We'll see what happens. But anyway, what this means is, more than anything else at the moment, until further notice, is no more shorts on the 5-1 chart. Not that you got one, but even if you did, you wouldn't do it anymore. All right. You were short, Eddie? All right. Anyway. Again, we did an exercise. It's on YouTube. Bear with me a second. I sent this out to somebody yesterday about trend trades, but there was an old exercise that we did on trend trades where we went in history and we did two things. There's one of these videos is where we went in and we took really strong small trigger lines. No, Vinicio. Similar, but the 8251 should line up, and then the 142 is its own thing. So look, the lesson in this video was simple: to go back in history and to only circle tails with really strong triggers going up or down. That was the lesson. And once you get that look, then to go in and, again, we had some rules that we did in this video for some simple stuff. And the short version is we went back in and we found out where all of the circles were and where we had midbands and fibs and triggers that came together and what the results were. Anyway, you guys can go watch that video on your own time. But again, this is just kind of the same, we do the same thing every day over and over and over. It's, this was another lesson that we did on trend trades. And again, you guys have that link up there. And in this lesson, all we did was 5-1 trend trades only. And we just went in and found every possible 5-1 trend trade by itself without the benefit of the large chart. So where did the 5-1 trend trades become true? When we marked up hundreds of them. And then we went back and looked at our big chart and said what hurt the trade and what helped the trade. And again, you don't have to necessarily watch these if you don't want to. I know there's a lot of information, but again, it's always the same thing. What's going to help a trade? What's going to hurt the trade? And we've got it all documented, but until you've seen it 100,000 times, it doesn't stick, in the real world. Just like right now. We're not going short anymore on, because we have a transition and our synthetic triggers are up. So we're not going to go short. Understand? So the question that I have for you guys is, if you can't go short anymore, you know what my question is going to be to you, right? If you can't go short, can you go long? Right? That's the thought. So again, what are our rules for divergence pivot stop out? We already had a pivot stop out technically, but because again, look, this is where the new users are going to go, oh, I'm going to go short. And it's not that you won't get away with it. You could potentially get away with it, but again, the rule, it would be low probability. So the higher probability is long trades from the spot where you can't go short anymore. Do you guys understand that? So again, we have to say to ourselves, what is the objective for an edge trade? Well, we want to get to the edge, right? So can you define an edge? What do you guys think? Is this an edge down here? Edge of fibs, edge of everything. What do you guys think? Are you guys already long? Well, you might already be long. Gordon, you're long. All right. Do you guys understand this logic, though? More than, I guess more than anything else, it's a transition. And if we had a pullback, earlier in the transition, we would have got a good short trade. And because it's transition, the small charts can terminate the party, and will many times. And again, once you get used to that, I mean, that's not rocket science, is it? Granted, I didn't have an easy entry there or anything, but Gordon, you're long at 44. All right, a little late, but again, the rules for us for counter trend trading, I want to make a picture for you, and you tell me if this is correct or not. Again, we may not come back there, but I want you guys to have this concrete picture in your head. Having fibs, having a prior divergence line, and then buying as it reaches the edge of fibs and the prior divergence line. So, Gordon, I don't disagree with your long. I wish you were long at 38. It'd been a little better, but either way. And again, some of these you don't necessarily need the first divergence if you're with a big trend. If it's a big uptrending day, sometimes you don't get the first divergence. You just get a pivot stop out. So it's not always necessary. If you're counter trend, you really need two divergences. If you're with the big trend, you only need one, technically. So this is probably the case where one is going to be enough. But anyway, at least you're not going short, right? And losing. That would be bad. So not losing is half the battle, guys. Pretty easy lesson right there on no more shorts because of the 5-1 chart. And again, if you got a long, cool. If you didn't get one, no big deal. At least you're not doing the wrong thing at the wrong spot. All right, Gordon. So 44 to 65. Congratulations. All right, and basically you got out at the closing of the gap to the triggers, which I really like. Because usually this spot right here will be enough to bring it back down and retest the lows again. If we retest the lows, depending on how fast we get there, we'll see what happens. But we're getting into, the time where we normally take a break. Can you see how we're starting to get into a mess? We're getting into a spot where we may have resistance hold or a chop or a range bound area. You can see how, the low is reacting. So again, if we're going to move into a potential, we're not going to do trend trades with this look, right? Because we had a transition look and now we're working towards a range look in our triggers. Agreed? It's not all the way inside, but we're getting close to a range look. So, what are the trades you take for a range look? If you're going to do trades inside of a range, they should be from the edges and nothing else. So the only thing you can really do is buy support if you're going to do trades, in a range look, or your sell resistance up here, either way. Those are going to be your two trades to work with. Everybody understand this? Just give me a little while in the room. In between two areas, you can sell the top, you can buy the bottom, or you need to see a breakout one way or the other to definitively start trend trading again. Pretty easy, right? Not rocket science. You just have to know what to do, when and where, under what condition, when to stop going short. When here, I'm going to try to get this settled up here because I'm going to take a quick 5-minute break or so, and then if you guys have questions or anything that you want to go through, let me know. Otherwise, let's take 5. I'll be back in a few, and we'll pick the video back up from there. So I'm going to pause the video here as well. Oh, man, you know what? I haven't had my darn video running. That's what happens when you pause your videos. Sorry about that. All right, so let me revamp what I just said because we messed it up. We had a pivot stop out short. We talked about that, and again, just to kind of go through the picture here, we had talked about with the pivot stop out short and all 3 charts being green, taking a quicker profit and managing the trade a lot more tightly because it could bounce back up again. So on the smaller chart, this was our pivot stop out short spot right here, right? So going short on the retest of the divergence highs, and then this is where the market terminated the downtrend. Now, once we got another push up, we got another termination condition. So we have 1, 2, 3 divergences on our small chart, which turned into a more assertive short trade right here for some of our more experienced users. And that trade goes way back to 2004, 2005's trading plan. When you have fib resistance and divergence, especially triple divergence and divergence on all charts, you can sell a pullback to the trigger lines. Pretty easy thought process, right? So double termination condition, sell a pullback to the trigger lines. That's what Steve did right here. You guys see where my arrow is right there? So triple divergence, sell a pullback to the fibs and triggers, and he made some money. Now, the second part of what we're talking about is doing more short trades because we're at the edge of resistance with the expectation that we're going to make it down to the edge of support. Now, I want you to see something. I want you to watch this spot right here. I'll put a circle on it. This is almost the same thing we did over here. Look. Remember we hit all the fibs with divergence, and then it went up. And then you had a pivot stop out long coming off a support with a green background to get up to resistance. Then we had a pivot stop out and a triple pivot stop out, and then now we have a red background with a potential pivot stop out inside the triggers to get us back down to support. It's literally the same thing in reverse, isn't it? And this happens a lot in choppy areas. And this is why if you can adjust yourself, if you're already short, fine, but if you have to be able to adjust yourself based on the 14-2 chart to know immediately, and we left this a long time ago, right, that we were going to be in a range-bound market because of this crazy 14-2 chart. We knew it. We saw it. It's working out just as we expected, and now we kind of expect to get back down to the bottom of the support area. In chop, you usually hit the bottom or close to it, and then the top, and then it goes back down to the bottom again. Eventually, one of them is going to break out, but why not make a little money in the middle and from the edges in the meantime? And especially from the edges in a choppy market. And again, the ability to shift, a lot of what we do is trend trading, right? With the trend, strong triggers, everything going our way perfect, do it over and over and over again. But there are times where the market takes a breather. And when it takes a breather and things get choppy, the best thing for us most of the time is that we end up with really, really solid Fibonacci areas at the top of the range and the bottom of the range, ideally. And when we have fibs at the top and bottom of the range, we can make hay where other people don't have the ability to. So, again, just chop is not a bad thing. A lot of people yesterday sent me emails and they said, "Oh my God, how did things go with the volatility? How'd your software handle it?" And I was like, "Are you kidding me? It's perfect." And then when it gets choppy, people send me emails like, "Oh my God, it was choppy? How'd your software handle it?" It's like, it's perfect. We have pivot, stop out, edge trades when it's choppy, and we have trend trades when it's moving. So, and if it's not perfect, we don't have to do anything. And we usually end up with, 4, 5, 6, 8 trades a day that usually work out really well. All right, Adam, let me see what you got. All right, all triggers were down on the S&P. And, this is one of those unfortunate ones. Here's the thing. There's a couple of things in here, but I want you to look at this for just a second, Adam. The rules for going short, you must be at fibs or mid bands in order to go short. So you went short in the middle of nowhere. Do you see what I'm saying? You sold nothing. You need lines of resistance to go short from. I mean, just that alone is a good idea, right? So the idea is we want to sell resistance, and then look, had you have sold resistance, it wouldn't have really changed the outcome. But what you would recognize is that you have what? What do you have? You have blue fibs on all of your triggers, but you do have 4 past, which is okay, right? You can still go short, like you said. But you also have to pay attention to the divergences on your small chart. And then, had you have entered at a more decent spot, you might have evaluated and said, I'm getting in above all of my fib resistance, or maybe the second resistance. So, again, you would have probably entered here. I don't think it would have really changed the outcome of the trade, but you probably wouldn't have lost as much. Theoretically, you could have lost a little bit. You would have never have won the trade, so I'm not going to try to convince you there was a winner in there, but your entry area was wrong just by itself. So your entry area was wrong, and, you did have a breakout on the 14-2 chart, but the divergence against you really hurt the trade. And I'm not totally against it, but by the time you get up to your spot, it's kind of hauling ass up there, so you may have thought twice about it. Anyway, no big deal. It's just a trade. But do you understand that? Can't sell in the middle of nowhere. I mean, you just can't be consistent with that. That's just, you got to get the right entry area first. And then when you're in a breakout of fibs, divergence on the small chart really hurts. And again, I don't think, necessarily don't have to not do the trade, but, again, making sure you get the right areas would usually help out a lot. This hurts when you're breaking out from a fib. If there was no divergence, it'd be a guaranteed short right there. But, again, armchair quarterbacking on that one. Here, I'll give you that picture just so you have it here. I'm always suspect when they break out of fibs. We spent a lot of time on this, and look, I've even put some pictures in here. Let's see. Break out of fibs. When you're trying to break out from a fib area, a lot of times, the first, here's what I'm talking about. Like a breakout of a fib. And it's not that you're not going to do the trade, but right when you break out, that's the most sensitive time for a trend change or a breakout. And a lot of times the small chart will terminate very quickly after just a little breakout when everything's not coming along. Does that make sense? So a lot of times the farther away the synthetic triggers are, usually there's a lot more chance for a breakout and then a failure of the breakout. And I think you had kind of the same thing on yours. Yeah, it wasn't even bad. I mean, even your synthetic triggers were pretty close. So, again, just this is the breakout attempt, and the small chart just really hurts it. Anyway, no big deal. There will be more. Keep posting them in. We'll talk our way through all of them. All right. So if you were short, you're not short anymore, right? And again, you may not be long yet, but you're not short anymore. Because if you're in a chop and you hit support, then now it would be nice for them to get to the edge of support this time. So do you guys see what I'm saying? I mean, to really get a good stop out of that low right there and get to 30 and then go up from there, that'd be a good spot. All right, Carlos, you have one more for me here. This is gold. Okay. Digesting your chart here. So 21.3 gold says long guaranteed free money type of look, right? Pivot stop out on the 14.2 chart. Buying the fib support on the smallest chart for your entry with a teeny tiny little stop, and you're looking for a huge moneymaker profit. Cool. I like it. All right, guys. S&Ps, look at the difference. Yesterday was pretty crazy, and then, this morning they've had some volatility, obviously, but they're hanging in there pretty tough on the S&P, trying not, they kind of have a big range on the 14.2 chart. Look, the low was retested. Again, these fake breakouts at the tops or bottoms. Pivot stop out at the edge of fibs. Kind of a mess in the middle here. They did that same fake breakout again, didn't they? And again, I always wonder when I look at a fake breakout, it's like, what did the small chart do at that spot? Was there any sign at the bottom that it was a fake breakout? So you remember the trade that we said that you can kind of get away with? Let me go back to this morning. I drew a little circle on it. Double divergence with the fake breakout. Again, this is the same spot. Granted, this is on the micro S&P, but the same thing. This was this morning's fake breakout with double divergence to ruin it, and then the market went up. So we had the quick stab long, a pivot stop out long, and a trend trade long. And then now, what did we have? So coming off of the lows, we had the same thing. 3 divergences, and then we had the quick stab long, the same exact trade as this morning, literally, at same price too. And then now, what do we have? This was probably your long trade, I would imagine. Unfortunately, divergence took you out of it from resistance. So, look, termination condition. Termination, 3 divergences with a fake breakout, and then, again, you tell me on the micro S&P. One attempt at a long trade here with this look or not? Yay or nay? Which thought process? Long or no? Deeper. All right. Well, if the big chart says yes, then the answer is yes, Dan. The small chart won't say less until the 8-2 gets below the triggers over here. So again, I understand what you guys are looking at, but right now it doesn't really, this isn't really against anything. And again, I already said you probably already had your trade, right? So this was your trade. It was inside the triggers at the mid bands and all the areas. Unfortunately, you got divergence and they kind of took you out of your trade. So again, it's already kind of happened. This was your trade. This divergence at resistance probably got you out. Hopefully not too much harm done. And then if this rolls back over, you'll probably get one more attempt at the long trade to get you up to, I would imagine, up here. So again, you don't look at the small chart to worry about chop. If you're not, you know what I mean, Dan? You look at the small chart first and you get a 100% definitive answer, yes or no. Then you go work out the particulars on the small chart. 100% definitive yes or no on the 14-2, and then you can move to your small charts to fine tune your trend trades. It spooked you? Yeah, that's okay. Look, if you only had this chart, would you be spooked for your short? So again, and I'm not saying that it's not over. Look, it was over. So we already had, the trade and then something that was against it on the small chart in a transition. So I'm cool with that. But with the look, with it green, do we want to try it again? Yay or nay? Nay? All right. Here, we'll watch it together side by side. Look at your triggers on your 14-2 chart first. It'll answer the question for you. So they bamboozled everybody out a little bit, but do you do it again? That's always the question, isn't it? Do you do it again if you got taken out? How are you going to base your decision? What are you going to base your decision on? I mean, trading is fun. It's a challenge, right? So when are you going to get in? When are you going to get out? When are you going to allow the pivot stop out to, do you use this spot to get back in again? This is where maybe the market flow comes in handy. Or do you try to pick it up on somewhere like that when you break through a fib? By the time you go back and look at how strong the triggers were on the 14-2 chart, you've missed the money. Looking at just the 14-2 chart, does it look obvious? Of course it does. That's what you're looking for, guys. But not only that, look, where did you come from? I mean, you came from a termination condition, from multiple time frame fibs. Then you had the breakout, then you had the transition, then nothing else has really changed. Anyway, just food for thought. MB, do you do that one more short trade or not? I was wondering about your market flow use after you hit a fib. Do you do one more or not? All right. Questions. Do you guys ever do the micro S&P? Have you guys played around with it yet? Check this out. I took some pictures yesterday. Bear with me. Look at this picture from yesterday. This is close to the close. So the micro S&P did 600,000 contracts almost yesterday. The big S&P did 2.6 million contracts. So the micro S&P did almost as many as the September crude oil. By the way, well, it's about the same as the S&P. It's a little more jumpy maybe because it's thinner, but anyway, needless to say, I started watching the 1019 crude oil volume yesterday because today technically is the rollover day for crude oil. The volume hasn't switched yet, but it's pretty close. So look, this is live volume right here. So tomorrow we're no longer going to be trading the September crude oil. Tomorrow the October crude oil will have more volume than the September. So you guys need to change your charts over today from the September to the October when you're done with your day. Do you guys know how to do that? It's a good time to kind of go through that again. Just, it never hurts. Again, on the education page, on the software user guide, you can pull it up. And then from the user guide, you can go to adding a new symbol, rolling contracts, which is on page 17. Just click on the link. And from the link, you can go to the control center and go to tools and then instrument manager and then type in CL and hit search. And then you highlight CL and then you click the left button to add it to your symbol list. Gamini, I have no idea. Take a picture of what you're talking about. And then look, once you've added the symbol, then to change the symbol, all you have to do is use the drop-down menu and then change it. So Gamini, I'm not 100% sure what you're talking about. Take a picture for me if you would, please, and we'll see if we can get to some kind of solution here. All right. MB, this was the one I was asking you about. Do you do one more attempt at a short trade to get down to the pivot stop out area or no? I'm just curious. Just right click on your chart, Gamini, anywhere in there. But reload all historical data is not F5. Right click, reload historical data. The reload ninja script is F5, but not historical data. His answer is going to be no after that. I just wanted to test him, Carlos, like you do with me. Look, no shorts after support and double divergences. Right, Carlos? It was a test for him. No shorts after support and double divergences. I know. And if you try to go short, what happens? It doesn't work. I did it anyway and put a break even in just to prove it. Gamini, you keep saying that. I don't know. Take a picture and show me what you're talking about. Or get with tech support. I can't do tech support from here. I mean, I can help a little bit, but when in doubt, if something ain't right, go to tech support. All right, so let's check up on our friend the S&P. And again, what spooked you out and what could have spooked you back in? When is divergence over? When you have a new divergence or you break the divergence. So, I mean, look, we had divergence over here, it looks like, right? Sorry. So, do you see the divergence we had up here on the top of this chart? I mean, this divergence technically is true, and then now we're going to retest that divergence, so we'll find out. But I mean, it's true, and we haven't had another bearish divergence since, have we? If I get rid of the synthetic one. So divergence is true, Steve, until you get a new bearish divergence, which we haven't yet had. Or you have multiple bars that close below a divergence, like see this divergence low? So look, when the line ends, it's over. The software doesn't, you don't even have to worry about it technically. So, but again, a new divergence or breaking a divergence is over. Cool? All right. How does the S&P look to you now? Hindsight. What got you out? What got you back in? Were you really scared, and what were you scared of? It's easy to see after the fact, isn't it? Again, look, I'm done for the day, but again, look, I go back to it and, I say the same thing every day, and termination, triple divergence, a quick pullback to fibs and mid bands. I was still very, very in love with trend trade long right here. Divergence beat you out of it because of the transition, and then you had to be assertive and get your butt back in again when it said go. And if you did, you got paid, and if you didn't, then you were sitting there going, man, I wish I had some of that. All right, Todd. Happy anniversary. 24 years. Great one. Nicely done. Congratulations. Anybody else have any questions or anything you want to go through? I think we've had a great day today. Lots of education, lots of scenarios, and, again, another really good day. And by the way, I did record the day, so if you missed part of it, I will put it up on the YouTube. So, again, I appreciate you guys being here. If you guys need anything in the meantime, let me know. If not, please go in and follow the plan, guys. Follow the plan, track your trades, go in at the end of the day and do market replay, and make sure that you have pictures. Make sure that you track your pictures, track your results, do your trading during the day, and then also do replay at the end of the day and fix whatever you broke during the day. Whatever you didn't do right, go back and do it over and over and over until you get it right. Take pictures of the correct trades at the time of entry, and then take one at the time of exit while you're learning. It really helps a lot. Repeat as many times as you can, and then only when you can guarantee yourself that you're going to be a winner do you even try to trade live money. So, I appreciate everybody being here, and I appreciate all of your time, and I look forward to seeing everybody again tomorrow. So you guys have a great afternoon, and we'll see you guys mañana.